Did you know that Canada is ranked among the top G7 nations in GDP, population, and employment growth over the next 5 years? This is highly correlated with demand for all types of commercial real estate. Welcome to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. Let's get right to it. According to CBRE's 2025 Canada Real Estate Market Outlook, the country finds itself at a significant turning point. Politically, economically, and socially, Canada faces challenges such as housing affordability and congestion. However, despite these hurdles, Canada remains a growth opportunity. The coming year is expected to be one of increased activity, with the cost of capital crisis beginning to ease, and, depending on global bond market conditions, an uptick in investment and leasing activity is anticipated. Leasing fundamentals are generally improving, though the influx of new supply in the office, industrial, and residential sectors will take time to be absorbed. This is particularly relevant for the multifamily sector, where immigration curbs and new supply deliveries have created near-term uncertainties. Yet, the long-term growth fundamentals remain strong, providing a compelling investment thesis. As investors, it's crucial to look beyond the immediate challenges and focus on the promising, long-term opportunities in multifamily real estate. The industrial sector is facing some headwinds due to softer demand and a surge in new supply. However, the market is expected to work towards normalization sooner than some might anticipate. This is promising news for those of us invested in industrial spaces, as normalization can lead to more stable returns. Turning to the office sector, occupiers are shifting back into a growth mindset, paving the way for recovery. A focus on flight to experience and a slowdown in new supply will likely lead to an undersupply of modern, amenitized, and environmentally sustainable buildings. This presents an opportunity for investors to capitalize on the demand for high-quality office spaces. In the retail sector, positive leasing intentions combined with a supply-constrained landscape are pushing retailers to consider expanding into secondary markets and altering the scale and format of their stores. This flexibility and approach could open new avenues for investment in retail real estate. Overall, while there are certain challenges in the real estate market, the outlook for 2025 remains optimistic. With improving capital markets and debt availability, there is a sense of optimism that is bolstered by Canada's strong economic fundamentals. As we navigate these changes, it's important to remain focused on the long-term potential, particularly in multifamily and industrial sectors. Thank you for listening to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. See you on the next one.